cash flow, how to get the best possible cash flow out of your investment properties. Well, look, if you're an income-based property investor, in my experience, there are 3 key items that you need to have in mind anytime you're shopping for a property that you're buying for cash flow. And the first one is know that you're shopping for cash flow. Don't try and have it all with your properties. If you take a generalist approach, you're often going to give up some elements there that will negatively affect the net income. So what I mean by this is, if you're shopping for a property, look through the lens of an investor that is shopping for cash flow, and know that and have that intention right from the very beginning. Far too many investors try and have it all when they're buying a property. Not only do they want cash flow, but they want to be in an area that is going to be appreciating. They want to have a property that looks cool and is nice that they can show off to their friends. Well, look, if you're an income-based property investor, you need to look at it through the lens of an income-based property investor, and this means shopping on a rent-to-price ratio and looking at where tenants are moving to and what areas are tenants wanting to be living in, and buying based on that. So shop on rent to price, not necessarily with a generalist have-it-all type of approach. The second thing is understanding the tenant demographic that will pay the most for the suites that you have in mind. Far too many investors write very generalist ads. They're trying to appeal to the widest possible audience. Well, when you have that, yes, you're going to get the most amount of leads, but it might not be the type of leads that will pay the most for that particular property and will stay there for the longest time. So it means knowing your suites. If you've got an upper unit of a secondary suite, or if you've got a townhouse, then you want somebody in there with a young family. You want someone that's going to appreciate the extra space. If you've got a multifamily unit, you're going to get people there that favor mobility, that favor a minimalist living style, that are going to want to be able to have more flexible lease terms. They're going to be the ones that are going to say that's the right suite for me. The third thing that I want you to keep in mind is to set your properties up for low repairs and maintenance for as long as possible. Far too many investors stop short on their renovations when they first purchase something because they want to save as much money as they can on the reno, and they know that they've got their property looking great. It's got those new appliances, the new countertops, flooring and paint. All of that stuff looks good and will get you that first tenant that will pay you a great rate. But your third or fourth tenant down the line, 2 to 3 to 5 years down the line, well, your flooring might not have been the right type of flooring to not have to be replaced or be cleaned. You might not have the right type of paint on the property that shows scuff marks too much, requiring you to repaint all the time. Or maybe you've got water getting where it's not supposed to go. Listen, when you're doing your initial renovations or when you're buying new, be mindful of the long-term repairs and maintenance prospects for that particular property so that you can keep your operating expenses very low. When you get it all right, it's an incredible feeling to have a secondary source of income over and beyond your active employment income. When your properties are running smoothly, it's a much more positive experience. So if you're looking for cash flow, keep those 3 things in mind, and happy investing.